Nifty Sensex off fresh all-time highs as financial services RIL lead gains. Most sectoral indices in the green, PSU banks and metals continue to gain while media and real estate emerge as top losers. Hardcore rallies in trade. The stock is up over 11% on the back of signing an accord with the Gujarat government for 14,500 crores. And Zomato is down over 3% after GST demand notice for 401 crore rupees. Fog expected to continue in northwest and parts of central India. 22 trains are running late and 134 flights are delayed in Delhi. This is Samina, Nalwala, and you're watching the F&O Show, where we take you through stocks and the derivative markets. The markets are off their day's high point. We were trading comfortably about 21,700, now shy of those levels as we speak. But Agam is standing by with more action on the F&O side. Agam, over to you.
Right, Samina, it's going to be an action-packed day. At least that is what we're expecting because, well, it is expiry. It is not only the final expiry of the month, but also the one of 2023, and we have seen markets hit new lifetime highs on this final expiry of this year as well. So it's a big positive all across. For now, of course, December futures will naturally show unwinding as far as open interest is concerned, but we're looking at the benchmarks advancing and the Nifty sustaining about the mark of 21,700, and that's a big positive. Let's talk about the bank Nifty too, and there once again we're seeing a little bit of profit taking as soon as the bank Nifty hit the mark of 48,600. We're about 200 points shy of that level, but well, gains all the same, about 0.25% high there as well. How the options market panning out at the moment, considering today's options expiry as well? Let's take a look at that. As far as the Nifty goes, well, we are looking at a lot more writing through 21,500, 21,600, 21,700 when it comes to calls, and of course on the lower end a little more writing coming across 21,400 levels. And in terms of the changes too, as I was mentioning, we are looking at puts building out around 21,500, 600, which means that a lot of writing has come through, and of course further unwinding of 21,500 calls. And in terms of the bank Nifty, once again we're keeping an eye on the 48,500 mark, because it seems, at least as far as the morning's trade is concerned, that seems to be a little bit of a pivot at the moment, and a substantial amount of puts written around the 48,000 level, and of course on the higher end we're also looking at a lot of writing around the 49,000 level. Well, for now, of course, 50,000 won't matter too much at the end of the day, because well, we're quite a bit far out in the December series. January series, of course, is a completely different matter. That's where we will see a lot of more activation with respect to the 50,000 calls, but that's a wait and watch. For now, of course, the bank Nifty along with the Nifty holding on to the gains, and well, we're going to have to see whether or not that in fact does sustain through the course of the day.
Indeed, Agam, holding on to gains, that's probably the best way to justify and explain a fairly quiet week which has seen new life highs being made. Well, a quick check on the broader market action, because there are quite a few stocks that are catching our attention. I mean, look at Hudco. We talked about this on our headlines. The stock is up 18%. So it's at its day's high point, looking very, very well placed in trade, around 133 rupees on Hudco. You've also got Hindustan Copper that's out of the F&O ban. The stock is up 9%. Suprajit Engineering is seeing a gain of 9%. EIL, Engineers India Limited, is another 7% move there. Quest Corp is up 4.5%. Mid-cap metal names like Nalco also up about 4.5%, 5%. OMCs are back up and running. They did take a break in the first 2-3 days of this trading session, of this trading week, but now back in the green. HPCL up 4.5%. BPCL also trading in line with that, about 1.5% higher. Thermax, BHEL, CESC, which we covered in terms of news, 5-star business finance on back of an antique upgrade, are some of the counters that are trading in positive territory. On the sell side, you've got Zomato that's leading the losses with a 3.5% cut. 3M India, after a strong run-up in the last 2 days, is taking a breather, consolidating with a cut of 3%. Jubilant, HFCL, Balaji Mines, these are counters that did really well in trade yesterday. This morning, though, seeing a little bit of profit taking off the table. We're now joined by Nilesh Jain, Head AVP Tech and Derivative Research, joining in from Centrum Broking. Nilesh, hi. Great to have you on the show. We've also got with us Osho Krishnan, Senior Research Analyst from Angel One. Nilesh, I'll start with you. The Nifty has managed to make a new life high on a week that was expected to be quiet. What is the trade on Nifty at these levels? Looking a little uncomfortable, especially with the WIG seeing a jump. The PCR has also gone up in yesterday's trade. So keeping those aspects in mind, where from you're on the index?
Very good morning to you, Samina, and everyone. So if we look at the overall structure, Nifty today hit a fresh all-time high. But looking at the F&O derivative data of today's monthly F&O expiry, that shows that 21,800 is acting as a study wall, and on the lower side, 21,500 is acting as a major support zone. So that's the broader range as of now. But from expiry point of view, I feel that 21,650 to 21,750 could be the expiry range from today's expiry point of view. Although the undertone continues to remain on a positive side, but we still have a cause of concern on volatility index front. So India VIX hit another 7-8 months high beyond 16 levels now, and that is still a cause of concern. It needs to cool off below 14 levels for bulls to regain the control. Although we are witnessing a good momentum in the market, but at current level, the risk and reward is not that much favorable. One should wait for some correction towards 21,600, 21,500 to take a fresh entry, and those who are already holding the long position can continue to stay put, keeping stop loss below 21,600. So expiry point of view, we expect a positive expiry for the Nifty in the range of 21,650 to 21,750. On the other hand, look at the Bank Nifty, which already took out 48,000 mark yesterday. So certainly Bank Nifty looks more stronger compared to the Nifty index, and we expect Bank Nifty to inch toward 48,600 to 48,800 on immediate basis. And from January's expiry point of view, we expect Bank Nifty to move towards 50,000 levels.
Okay, well, I do want to remind our viewers that considering today and tomorrow are the final trading days of the month, as well as the year, of course, well, there is always this tendency of institutional buying coming through in the last half an hour of trade. And especially given the fact that today is expiry, that could perhaps change things just a bit in between 2:30 and 3:30. So you do need to keep an eye on that one because it could, in fact, change things substantially when it comes to option premiums, especially because option premiums will anyways be very small towards the end of the day, and that's when you tend to see a little bit more volatility with respect to prices. That said, Osho, good morning to you as well. How are you trading these indices, and what's your view here?
Very good morning, everyone. Well, my view aligns with what the market and most of the analysts has. Undertone remains bullish, and we have seen a strong breakout in yesterday's session. If I will be talking about the specific level front, then 21,600 was the zone which was expected to act as a very strong resistance. But once we surpass that zone, we are again have entered into a very strong momentum in the market. But overall, looking at the overbought positioning in the market, we are expecting that on immediate basis, 21,800 and 21,600 should be the range for Nifty to trade in for the coming 1 to 2 trading sessions. But on a broader perspective, we have seen that Nifty is now eyeing for the zone of 22,000. So on a broader term time frame, the undertone remains very buoyant, very bullish, and we are expecting that from short term or for the coming year, one can definitely expect 22,000 milestone to be tested. So overall, the undertone and stock specific movement should be something that one should gauge on, and definitely on any dips towards the zone of 21,600 should be auguring well for the bulls in Nifty.
Sure. What about Bank Nifty? It was expected to face resistance around 48,000, 48,250, and it did struggle around those levels last week. But yesterday, of course, the story was very different. How would you approach Bank Nifty considering it's also expiry?
See, overall Bank Nifty, as you have mentioned, that it has given a breakout in yesterday's session. So obviously we are expecting that from here onwards, one can expect the upside movement to continue. And if we are expecting a broader view in the market is bullish, so we will be definitely looking for a buying traction in Bank Nifty. So overall, the undertone for Bank Nifty remains bullish, dip towards the zone of 48,200 to 48,100 on spot levels should be arguing very well for the bulls, and one should definitely try to buy on any dips of 150 to 200 odd points in today's session. On the higher end, 48,500, 600 should be the immediate target for today's levels. Even beyond that, one can expect 48,800 in the coming days.
Okay, let's very quickly address what's happening in the broader markets as well. And by broader markets, I mean essentially some of your key indices which will be in focus in the first 2 weeks of January. One of them, of course, will be the IT index. Why? Because we will have earnings there. And, you know, information technology in general has already had a very volatile month of December. The question is, what can earnings do? Of course, this is going to be a lean quarter because of the furloughs. That said, if we could take a view on the IT index as well. Nilesh, if we could come to you on this one, your view on this one.
All right, Agam. So Nifty IT index, we have seen a good up move in last couple of trading sessions. Although today we are witnessing some amount of profit taking, but the major structure continues to remain on a positive side. It has formed a good base near about 32,000, 33,000 range. And we already have seen a good breakout above 33,800 levels. So that is acting as a major support zone as far as the Nifty IT index is concerned. We are bullish for the upside target of 36,500 to 37,000. So within this space, a couple of stocks that we are liking. One of them is SCL Technology. This particular counter is constantly forming a high top and high bottom formation, and it has hit a fresh all-time high recently. So I feel the structure looks strong for another round of buying and move towards 1500 to 1530 on immediate basis. One can keep a stop loss below 1450 for the long positions.
Osho, what about metals? Sharp rally there yesterday. Even today, some of the mid-cap metal names are looking pretty good. How would you trade the metal index? And if there are any specific metal counters you'd consider a strategy on?
See, overall, there has been a strong upside movement in the metal counters from the past 3 to 4 trading sessions. So majority of the counters have given a return of approximately 5 to 8% in the last 2 weeks. So obviously, from here onwards, metal indices are looking very positive, but also we have to have a very pragmatic approach because looking at the risk reward, now many of the counters have entered the overbought territory. So one should have a very strong and conservative approach. But the counters which are still having potential is JSW Steel. JSW Steel, if I will be talking, then in the recent period, it has seen a very strong V-shaped recovery, which has seen a breakout around the zone of 870. So from here onwards, one can expect a decent upside movement. Nearly 900 is the target that one can expect in short run, and any dip towards the zone of 870, 865 should be arguing very well for the buyers, and one should definitely try to accumulate this counter for a higher target from short-term perspective.
Okay, well, that's the view coming in as far as the metal sector and, well, one trading idea that Osho has presented. And on that note, we slip into a short break, but on the other side, we talk about a lot more in terms of stocks. Stay tuned in. This is the F&O Show. We put the spotlight on all the stock ideas that our experts are recommending. And right at the top, we have Canara Bank. Let's pull that up and see where it's currently trading, because Osho does have a view on this one. But before I go to him, I do want to take a look at what's happening. So, well, we do have some strength coming in. Osho, what's the view here and how would you play Canara Bank?
See, overall, Canara Bank have seen a very strong reversal, and also it is in the news, so one can expect a very strong momentum in this counter. At present, definitely the technical perspective looks very strong, so one should try to accumulate even at the current levels. 440, 442 on the spot levels is a very strong accumulation levels for Canara Bank. On the higher end, it is expected to retest the previous immediate swing high of 455, and even it can surpass towards the zone of 460 in the coming future. So one should definitely try to accumulate this. On the lower end, for short-term traders, it is advisable to keep a stop loss of 428. But overall, the momentum looks very positive, and one can expect a very decent up move in Canara Bank in the recent period.
Nilesh, I believe you've got a buy call on Apollo Hospitals. Can you take us through it?
Right, Samina. So this particular counter where we have seen a good breakout of past couple of weeks now. So this breakout is looking very strong, and on the upside, if you look at the target price for the Apollo Hospital, that comes around 5,800, and the stop loss should be placed below 5,670. Looking at the overall structure and momentum indicators and oscillators, where we have witnessed a fresh buy crossover on the daily time frame chart. So Apollo Hospital looks good for immediate target of 5,800 followed by 5,900. Stop loss can be placed below 5,670.
Okay. The other one, Osho, which is on your radar, I believe, is also Exide Industries. Can you take us through that one?
See, overall, Exide Industry is looking very strong. It has seen it has been in a very positive trajectory in the cycle of higher highs, higher lows. Recently, it has gone reached towards the zone of 310, from where it has seen a decent profit booking, and again is arguing well for the buyers because it is hovering above the 21-day exponential moving average. So from here onwards, it is again an opportunity to buy this counter around the current levels. 300, 301 is the spot zone. So one should definitely try to buy this counter. On the higher end, we are expecting that from here onwards, it can retest first. The immediate resistance can be seen around 310, but we are expecting a target of nearly 315 in the short-term period. So overall, we are expecting nearly 4 to 5% of returns in a short-term time frame. So one can definitely try to accumulate. Also, for the short-term traders, it is advisable to keep a stop loss of 292. So from here onwards, it is looking very positive on technical front, and one can definitely try to accumulate it for short term.
A quick mention I just want to highlight for our viewers Azad Engineering. The stock debuted this morning with stellar gains, and it continues to trade very firm. I think 38% higher is what we have on Azad Engineering, 36%, and it's holding steady. This is exactly what the markets were indicating the stock to open at, and it's pretty much kept in line with expectations, 36% high on Azad Engineering on its very first day. Nilesh, I'll come back to you on SAIL. I believe that's another long call you have. You've talked about the metal index already with me, but a specific trading call on SAIL, what's the TP, what's the stop loss, what's the trade here?
Right, Samina. So I have a similar view in line with what Osho mentioned. We have a positive bias on overall metal space. We have witnessed a good up move in the December series so far in the metal counters. This particular counter has been the laggard. We have seen a lot of underperformance compared to the other metal counters. So now looking at the reversal that we have seen in this particular counter, it has formed a good rounding bottom. It is forming a higher and higher formation as well. And on the back of a fresh breakout at 118 levels, I think the next target for this particular counter comes around 125 followed by 130. Stop loss can be placed below 117. And even if you look at the rollover data of this particular counter for the January series are looking slightly on a positive side as well. So yes, the Steel Authority can be bought for immediate target of 125, and position target for this particular counter comes around 135 to 140.
Okay, I'm going to quickly pull up all the gainers in terms of open interest today in January and take a look at where we are, in fact, looking at seeing more traction. So let's have that. So we do have Balrampur Chini along with Hindustan Copper and PI Industries. All of them extremely volatile, and we are looking at an increase in open interest towards what most likely seems like fresh longs. Delta Corp will soon be out of the futures and options space, and I reckon that we are looking at some shorts building up there. Of course, both these aspects are not related, but well, we are looking at a little bit of weakness as far as Delta Corp is concerned, but the fact that it moves out of the futures and options space may not necessarily be a negative turnaround. And well, then we of course have Biocon, which is also under a tad bit of pressure at the moment. That's down around 2%, some shorts building up there as well. And in terms of open interest, losers, I reckon in January we won't have too much to speak for, but we do have a bout of short covering for Nalco and RBL Bank, and longs and winding in IDFC First, L&T Tech and SBI Card. So we continue to keep an eye on these as we move into a new expiry tomorrow onwards. And on that note, I'm going to take a moment to thank both our experts, Nilesh and Osho, for joining us and taking us through their views on the markets. And with that, it's a wrap on this show, but lots more lined up on the other side. Stay tuned in to NDTV Profit.
The reasons for the outperformance says the benchmark GRMs, which is essentially what you call the Singapore GRMs, is actually not only because of the discounted crude. Obviously, that has had a role. That is probably, if you consider that at one point, almost 30% of your crude sources was coming from Russia. And while that proportion may have changed, what is more important is that the extent of discount that you were getting from Russian crude, which is probably as high as maybe about $8 to $9 at one point of time, which translated into probably a $2.5 benefit from the crude alone. That probably has narrowed quite a bit. It probably would be less than 50 cents, maybe in that range or thereabouts in the near future. But the other aspect that has also led to an improvement in the refining portfolio is that there has been a sustained increase in the distillate yield, specifically of diesel, gasoline and ATF. If you look at the trends in product prices, the way that they have behaved in the last year or so, what has really driven refining margins has been essentially product spreads in these three products. Every other product, if you look at LPG, if you look at naphtha, if you look at other, pet coke, even propylene prices, because polypropylene spreads have been fairly low. Every other product has actually, declined in terms of product spreads. What has saved Indian refiners, specifically the OMCs, is that the yield of these three products has actually gone up from maybe around 55% odd a year or 2 years ago to close to 65-67% today. And since the product spreads of these three products are the strongest right now, that has also led to a premium over benchmark margins. If you look at historically, Indian refiners, specifically government-owned companies, have always functioned at a discount to Singapore benchmarks. And that has changed around even on a theoretical slate, leaving aside the crude cost advantage, to today probably a sustainable $2 to $3 premium over where benchmark is. So if you put that together, I would say that yes, you may not actually see too many quarters of $15 GRMs, which we did see in over the last 12 months at certain points of time. But sustainably speaking, you also are unlikely to see the GRMs for Indian refiners and PSU refiners going below double digits. That is what the base case assumption that we are working with for all the three OMCs.